How can dual status impact green card holder tax filing? Imagine starting the year as a green card holder and ending it as a non-resident. How does that change your tax situation? If you are a green card holder, your tax status can shift during the year, creating what is called a dual status. This can happen if you get your green card partway through the year or if you decide to give it up before the year ends. Knowing how this affects your tax filing is important for Latino families navigating U.S. taxes for the first time. When you have a dual status year, you need to file a special kind of tax return. You will use two forms depending on your last day of the year. If you are a resident on December 31st, you file Form 1440. You also attach Form 1449 as an informational statement. If you are a non-resident on December 31st, you file Form 1449 as your main return and attach Form 1440. Both forms must be clearly labeled as part of a dual status return. How you report your income depends on when you were a resident or non-resident. When you were a non-resident, you only report income earned from U.S. sources. This income is taxed at rates up to 30%. When you were a resident, you report all income from anywhere in the world. This includes income from your home country, investments, and work. This split in income reporting is one of the most important parts of dual status filing. It affects how much tax you owe overall. To file correctly, you need to know exactly when your residency changed. The IRS uses two tests for this. The green card test is simple for green card holders. If you got your green card, you are a resident for tax purposes. The other test is the substantial presence test. It looks at how many days you are physically present in the United States over 3 years. Once you know your dates, you can decide which income belongs to which part of the year and which form to use. Your filing deadline depends on your last day of the year. If you are a resident on December 31st, you usually file by April 15th of the next year. You can request an extension using Form 4868 if needed. If you are a non-resident on December 31st, your deadline might be June 15th if you do not have wages withheld. If you do have wages withheld, the deadline is April 15th. If you decide to give up your green card during the year, there are extra steps. You must file Form 8854 to certify you met your tax obligations for the past 5 years. If you are a covered expatriate, the IRS treats your worldwide assets as if you sold them the day before you gave up your green card. You will need to pay taxes on gains above the $20,890,000 exclusion amount. Planning ahead is very important to avoid surprises. When claiming deductions and credits, you must follow specific rules. Some credits like the Earned Income Credit or Education Credits are only available if you choose to be taxed as a resident for the entire year. If your spouse is a non-resident alien, you cannot file jointly unless they elect to be treated as a resident. If you do not file jointly, you will file separately. The process starts by figuring out your exact residency dates. Then, decide which form is your main return based on your last day of the year. Prepare the correct statement to show your income for each period. Make sure both forms are labeled properly as a dual status return. Submitting these forms correctly helps you meet your tax obligations and avoid penalties. Working with a tax professional familiar with immigrant and family tax matters can make this process easier. Understanding these rules helps you stay compliant and manage your tax responsibilities smoothly.